I was at a conference last week on business planning with other business owners. And also recently when I was teaching at Rollins College, I noticed there seems to be a lack of understanding or knowledge when it comes to this particular strategy for gifting to dramatically amplify our tax savings. Therefore, I thought it would be relevant to quickly discuss this in a video. Let's use an example. Traditionally, people would write a check, let's say to their favorite charity, for $20,000. If they're in the highest tax bracket, they would have potential tax savings of 39.6% of that gift to the charity. Obviously, this is subject to itemized deductions, which could be phased out. But in a simple example, a $20,000 check gives somewhere around $8,000 in tax savings to use against ordinary income. In the second example, though, instead of writing a check or gifting cash to the charity, we say, what if we could do it more strategically and gift an appreciated asset instead? So let's assume that you had $20,000 of stock or $20,000 of mutual fund shares, and there's a cost basis of $10,000 and a gain of $10,000. You can see that you're still giving $20,000 worth of value, in which case you would still get your itemized deduction for that charitable gift. But in addition to that, notice that because you gifted the asset, you avoid the capital gains tax that you would have had to have paid on that $20,000 worth of stock or mutual fund shares. In this example, if you avoid $10,000 of capital gains tax, assuming the 20% capital gains tax bracket plus the 3.8% Obamacare surtax, you have an additional savings of 23.8% on the appreciation. When you add these two together, you can see that you have tax savings as much as $10,000 on a $20,000 gift, which is almost 50% of the gift value. So what do you do now? When you're gifting, instead of writing a check to the charity, come see us, talk about this strategy. We've been really utilizing this with our wealth management clients. And always remember, the dominant strategy when gifting to charities is always look, do I have a taxable account or do I have an asset that has appreciation where there's an unrealized gain that I could gift that asset instead of cash to maximize or amplify my tax savings?